Hello, everyone. Happy afternoon. It is 2 o'clock on Monday with your two favorite people. I'm trying to get Ben on here. So 1 second. It's been a while a couple weeks since we did one of these. Our summers are just getting so busy out there, and yeah, Mondays can sometimes be challenging for that. So let me get Ben on. It's like, and you got to do like 10 questions before you can actually approve the payment. That's what it's getting someone on Facebook. Hey, babe.
Hello.
You look so tan.
You look tan also. Pretty tan.
Yeah. I was just telling them to get someone approved to join the live. It's like 20 different questions.
Oh, no.
They want to take your money, but they want to ask you 20 questions before they take all your money. So
Yeah, that's true, right?
I was just going to say, also being in your 40s as a woman, not really caring, don't wear makeup, sometimes in pictures, post them online, doing a live video, don't care. Just, I truly just don't care what people think of me anymore. So,
Good.
yes. Okay, so let's talk about the market. I know you have a few things that you want to share. I saw someone post something I wanted us to discuss. So,
Okay. I'm excited to hear about it.
different things. Yeah, so one of the headlines that I saw was don't buy. We are going to see a huge market crash.
Hmm.
What do you think of that?
I think fear sells, and people that some may not fully understand the ramifications of all facets of the economy and the mortgage industry and the real estate industry may be saying this because their experience has taught them that maybe they foreclosed in the past or something happened when the last market quote unquote crash. So you can't always trust what someone else is saying through a post that's trying to generate just a conversation.
Yeah. Well, let's talk about the crash in
Okay.
'08 and what that was like. So, why did we experience a crash
You keep
in '08?
cutting
Signs
it
that we
down.
should look for. I said, what was the crash that we experienced in '08 that make maybe people concerned that they're feeling now?
There were a lot of different factors. A lot of it was mortgage-backed securities and different types of loan programs. I feel like, and this is just my opinion, that mortgage companies in general, they were writing loans that I remember just one of them was, I heard, and it's nothing I personally did, but there was a janitor that was making $22,000 a month. And unless you're
Oh, wow.
janitoring maybe Bill Gates's house or something, that's not really I don't know of any janitors that are making $22,000 a month, especially back then. So, I think that there was a combination of things back then that put the market the other direction. But then, as you can see, when what I always say is when someone wins, someone has to lose. What goes up must come down. So if the market is going to crash, something is going to change and win. Most people only are one-sided and look at one thing when there are multiple facets to this. So, I will say I don't know what is going to win there. I know in our industry, that creates opportunity. It's unfortunate, but if someone short sells a home and you can get a home for less right now, over time, if you look at the values in 2006, 7, and 8 versus today, I don't think there's a home today that no one would buy back then at that price today.
Right.
So, I think they're up probably 150 to 200% or something outrageous. So I think, we're going to look back in 20 years, and we're going to go, wow, remember when we had that other crash or the supposed crash, and we would have bought every home in that market. Just like I hear jokes today about the early 2000s. So it's all relative to what's going on, and the best thing I can say in this is, if you're looking to purchase a home or invest in real estate, it's your unique situation that you need to figure out where you're at and what you can do long term, not waiting for a market to change or waiting for a rate to drop, or one thing that may end up costing you tens of thousands later.
Right. Well, and the other things to think about is, again, so mortgages were just being written for anyone and
Yeah,
anywho in any way, and compliance has greatly changed and impacted how mortgages are done now on many different levels, from appraisals to agents to lenders, all of that kind of stuff. So there was some security and standards and expectations that were put into compliance through the '08 thing. So that's different. Um, what I also see is that foreclosures and short sales are still down more now than they've ever been. So are people losing their jobs or having hardships and having to sell their home, or not being able to make their payments? Yes, that happens in any market. And I think what people are scared about is our political climate uncertainty right now, whatever side you're on, our debt, right? And the spending of that. Um, but in every market that goes up and down, you're going to ride it out, because most people are going to be in their home for the next 10 years. And in riding that out, you're going to come out on the top when that happens. Also, usually when we're in a recession, most people don't even notice it till we're coming out of it, not when we're going into it. So I think we're on that other end of feeling it, but it still hurts. So, but
agreed.
having
And
homes stay longer on market now and those types of things doesn't mean that it's going to crash. Having higher interest rates doesn't mean that it's going to crash.
correct. Well, back in 2000, that era, right? Rates had never reached COVID rates. So today in this market, we have people that literally have a 2% mortgage. We have
Hmm.
people, I think it's the statistic, and I would love for someone to find this little link that I saw. I wish I would have kept it, but over 50% of our population has
Not
rates.
anymore. Not anymore. No,
Really?
that's
Okay.
what's crazy, is it was like that up until about 6 months ago. And as of 6 months ago, more people are actually having 6% or higher rates in their homes now.
Really? I think a lot of people have paid off the debt because the debt load was at the biggest it's been in a long
Yeah.
time.
Well, they refinanced into
Yep.
doing that because, a 2%, a 2.5% is great to say that you have, but we've talked about when your overall interest of your debt is 10%, it's not, doesn't really make sense. So it's like, who are you trying to impress by saying, oh yeah, my mortgage is at 2%, but you're drowning in monthly payments at things that are much higher.
Well, and when you're at the end of the day, when you're trying to pay a car payment, pay a credit card, or pay your home payment, if you can not pay your home payment, like back in 2004, 5, 6, and 7, where that was going on, and then still pay the rest of the debt, foreclose, file bankruptcy really easy. Just a lot of the guidelines were easier then, with BKs and just different things of rebounding on credit and everything else. It is a little tougher today than it has been. So I think this crash per se, and I don't even know if we'll actually have one. We'll have to see, but I think it'll be a different in the fact of every market has a mini crash and foreclosures and all these different things. People just focus on what they want to focus on. So I think over time, I don't know if we'll see the biggest crash in history. That will create more opportunity if we do, though. And, that will bring some prices down, that will bring the rates down. There will be, like you said, if you can hold out and get through it, there will be some opportunity and some relief at the end.
Yeah, I just don't see us having a crash. Economics and statistics and
Agreed.
how things are happening. I think we're in the midst of coming out of a crash, I guess. I mean, these last 2 years of real estate have been the hardest in my career than any other years. And I started when that's all you showed houses were foreclosures and short
Mhm.
sales and 11, 10, 9 months on inventory. And I think what makes this market harder than then is perception
Agreed.
and expectations is people have these expectations that their home is going to sell quickly, or people aren't having conversations with their sellers about what is realistically what a buyer is looking for, or listing agents aren't even answering their phones. That's, I mean, the disservice of quality and customer service right now is so low that honestly, some of the agents and lenders are causing this market issue more so than the consumers, in my opinion.
Agreed. That's kind of online with what I want to talk to today on the mortgage side. It leads right into that is, there are a lot of surface level conversations of, oh my gosh, there's a crash, or there are a lot of surface level, even pre-quals out there.
Hmm.
And that is creating a lot of negative feedback in the market, in overall sense. And I feel like, I want to go over again the difference between the three. There is a pre-qual, which, really is just credit being pulled and maybe a pay stub or a conversation about some debt, maybe a soft credit pull where they don't really have all the info and they're giving you an idea. It's a guesstimate. Then there's a pre-approval, and that is an automated. It's an AUS ran, which is automated underwriting. And that is where you do submit majority of the 7 or 8 items, pay stubs and W-2s and different items. And then you know, put that into the system and it spits out a, hey, you're approved for X amount, right? That's not verified. There's nothing that went to an actual underwriter. You didn't actually do the next step. And then there's the full pre-approval, or the TBD, and that is a pre-underwritten file that gives you the basically not guaranteed, because nothing's ever guaranteed, but the closest you can get to being able to purchase a home. That gives you a better confidence in what your payment is, your rate is, what programs you have, all of the different things that put you in the driver's seat of your financial future, versus just, hey, I think I'm good, I can buy this house. We're not back in 2002, 3, 4, 5 anymore. You can't just wing it. This is your financial future. You need to turn the light on and see it. And this goes into one of our clients just recently. We got them fully pre-approved, and we were able to change the program that was out there on where we are, and put in the position of, it saved him a little over $10,000 in total between the two different programs. So it put us in a position where the client, if we would have just went with the normal surface level one, they would have spent $10,000 more. We were able to kind of get in and critique it and go through the strategies of it and save that money for them. And that's huge. That $10,000 over time, if the market does crash or something happens, can affect what the overall numbers are. So it's super huge for you to inspect what you expect.
Well, I think the difference in what I hear is you're not just looking to be a transactional mortgage broker, you
Mm,
are a lifelong wealth builder. And if your lender or your real estate agent isn't talking to you about future and what this property can do or what this mortgage can do and how to continue to build wealth, and they're just talking to you about the basic numbers or helping you just get pushed through the, not talking about other programs or hedging payments, I hear you talk about, just different things, right? Then you might not be working with the best loan officer, because a lot of people are just looking for the next transaction versus looking for partnerships. And that's okay. If you don't want to have that relationship with your lender or your agent, and that's not an area that you want to do, that's fine. I don't know why you wouldn't want to, but hey, to each their own. Um, I just think that's really important.
It 100% is. I mean, the bottom line is there's so many strategies, so many different loan programs, so many amazing things in our business. And most people don't even scratch the surface. They go to their bank or they go to the person that was referred, like a friend of the family who may not even be full time, and they just do what they think is good rather than truly inspecting and turning the light on early and going through it and treating it, like you should everything. You should be doing a mortgage review, a real estate review, an insurance review. You should have wealth partners that advocate in your corner. Working with us, we're going to help bring that with us. We're going to make sure that we attack everything in our lives, in our financial matters, to make sure we get where we are. We've made these mistakes before. And growing and just having that wealth partnership is huge, in all facets, including mainly, obviously, your biggest investment, most people ever make.
Well, and I think it's easy to say inspect what you expect. I don't think they know what to expect in this process, even if
Mm,
they bought or sold 10 years ago, 7 years ago, 20 years
true.
ago. So getting information, getting resources. You can put in Chat GPT if you want to, or whatever AI program. What are the top 10 questions I need to ask a mortgage lender or a real estate agent when buying a home or selling a home or whatever? We have a list of questions if that's something that you guys feel comfortable. I hope you do interview multiple people,
Yeah,
because
smart.
I want to make sure that you feel comfortable working with who you want to, because there's a lot of people that overpromise and underdeliver in this business. And the worst thing that you can do is get stuck working with someone that you don't know, that was referred or you felt obligated to. And this is not something that you owe anyone in your life, your mom, your sister, your best friend, anything. You owe yourself the very best to make sure that you're working with someone that's going to protect your future. Because at the end of the day, they're not paying your mortgage. They don't know your wealth building goals. They don't understand what your financial situation looks like, or even if you did show them how to read it or understand it at a level that makes sense. So you guys got to really be partnering with the right people.
And your expectations, like you said, some people don't even know. They may change. You may think that this is what you want, and then you realize that, wow, I can do this, this, and this, and they may evolve and get better.
Yep.
Or maybe those expectations are a little too high, and you have to bring yourself back down to reality and go, hey, before I get to there, I got to start here. Because that's the key about turning the light on in all facets, is it really helps you gain clarity and confidence in your financial future.
Yeah, exactly.
So tell me what you saw online, and I'd love
That
to
was
hear
that
you.
was what I saw online too about the
Okay,
market. And I did see something else. You and I sent you a reel that said,
yeah,
um, everyone's waiting for rates to drop. You guys can tell I have ADHD. My hair's up, my hair's down. I'm in the heat. I'm not in the heat. um, is they're waiting for rates to drop, and really between a 6.5 and a 6 was like $160 or something, which is just like a really nice dinner. So I sent it to Ben, and he's like, well, what's the loan amount? What are the speculations? And I'm like, because everyone's putting things out there and I think it looks good. And it's a conversation starter,
yeah,
right? Like
yeah.
so you again need to look into it further, because you don't know what questions you're asking. But I do think that education is helpful, because if it starts a conversation, it got my mind thinking about it, right? And I'm married to a lender, so it's a little easier for me to get some of those questions answered. But there's a lot of noise that's going on out there. And really, on a $500,000 home, technically, that is right around $162. So
Yep.
which also can go in the other direction. So it's like people sometimes focus on allowing lack of information to create lack of action. And I don't even want to call it fear, because I don't even think people sometimes fear it. I just think that they don't know what they don't know. And they just hear, oh my God, these interest rates are so high and this and that. But, a $500,000 home a couple of years ago might have been a $575,000 home, just because of where the market's at. And right now, we really are kind of bottoming out of prices. And I don't want to call it that the market's going down. I think it's correcting
Correct.
what it overdid during COVID.
I
And
agree.
so we've needed a correction. We've needed an opportunity for first time home buyers to get back in the market. We needed affordable homes, and that's just what is going on right now to adjust those times when, I mean, I can't remember. Ben and I had so many first time home buyers during COVID, and it was the saddest conversations because there was no market, absolutely no market for first time home buyers. And so I just think that this is a great correction opportunity. And, if you're going to sell, you may sell for lower, but you'll buy better on the other end. And if you're selling and moving out of state, same thing. If you're selling and moving into a retirement community, it's all going to make sense, and it all is about timing and what's right for you. But there's opportunity in everything. So don't think that it's not the right time. Everyone wants the most amount of money for their home, right? Like everyone wants to say how cool it is that their house sold for this, or blah 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 blah. But really, at the end of the day, what matters is what you're able to do with that to move on to the next thing.
And I'm going to challenge you in general, all of you out there, that if you're debating on waiting, know the numbers on 0.5, 1%, 1.5, and 2% higher and lower. Because if you're only looking at, well, it could only get better, it could also get worse. I've come into a rates where rates were 12%. Could we see that again? I never thought we'd see 2%. Never thought that. So could we? I don't know how, but yes, we could. So, this may be the perfect market when we look back in history, and you don't want to be the one to miss out on it because of lack of information, lack of education, or you not doing your own research and getting the right partners behind you to be able to take advantage or create strategies to be able to do that.
Yeah, I was just thinking when you were saying that, is this is not something to gamble on. This is not something to bet on. This is not something that you should be chasing up and down. Like, if you want to do that, go do stocks, use crypto, go to this casino, whatever you need to do. But when it comes to purchasing in real estate, it is all about if it makes sense for you,
Yep.
because you are going to miss out on your opportunity at building wealth if you don't.
And I guess my question, and this is something I always ask everybody, is there a time from today, right now in 2026, is there a time before today that you wouldn't have want to buy a home up to 150 years ago? I don't think there is. 2000, in the highest crash we've seen back in 2008, I would have bought any of those homes because of the price difference. And if we blinked and we were 10, 20, 30 years in the future and we look back to this day, we may be saying the same thing. That's why it's so important for first time home buyers to turn the light on and create a strategic plan for you to be a homeowner and create that roadmap so that you know exactly what route you're going and where you need to save or what you need to may do. Or maybe you can today.
Well, and I think about it, like, let's say you get in a home and the market crashes and you lose your job or you're not able to make your payment. Would it make more sense to be in your home that you could work with your bank on and potentially do a loan modification, whatever, or someone else's home that now you have to move out of because they're not able to pay their mortgage?
It's true. because you lose apartment just like you can lose a home if you obviously can't afford
Yeah,
or
if
you
you can't
don't
pay
currently have a
your
job.
apartment, yeah, you can't pay your apartment, you're out. Like they're evicting you. If you're in a rental, you're out. You're in your home, not saying that, but there is more security and flexibility and options for them to work with you long term versus being in someone else's and then being in someone else's and maybe you can pay, but they don't take your payment to pay the mortgage because they lose their home and have to pay their first house and not their rental home. There's just so much uncertainty
Yeah,
and lack of security in that situation than there is of your own home.
agreed.
So I just say if wealth building is not your thing and that doesn't like excite you to want to get into a home, protecting yourself and your family and providing some security and stability in your life should be your number one priority. So we'll end on that, but you guys, the Seahawks play this weekend.
Yeah.
It's Blue Friday this week. So exciting. It's
And if
going to
you
be
haven't
nice
watched
this
Hard
week.
Knocks, please do. It's amazing.
Oh yeah, he keeps talking about the Hard Knocks. It comes out on Tuesdays, you guys. I know
6
that because I've
p.m.
heard him say it 1,000 times.
Go Hawks.
Tuesdays at 6 p.m. Watch it. He was giggling like a little 5-year-old that had his first little crush, at school. Like
So good.
it was so funny. So, okay, well, go Hawks. If you're not a Seahawks fan, we'll help you too. I might not like you, but I'll help you. I'm just kidding. I like all fans. I like anyone that likes football too. And if you don't like football, that's okay too. Um, Other than that, have a blessed day. Thank you, babe, for giving me your time today. Always a great discussion, and we will see you guys next Monday.
Bye.
Bye.